Hi, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group. So on June 3rd, Congress passed the Paycheck Protection Program Flexibility Act, which offered some enhancements to the previously passed PPP program. And the biggest piece of this is they extended that 8-week covered period to a 24-week covered period, which is going to give companies more time to spend their PPP loan money. But in addition to that, this act also created additional changes and enhancements to the program that we're going to go over today. So we're going to cover the new extended 24-week covered period. The non-payroll costs increased from 25% to 40% of the loan amount. They may increase the max employee comp from $15,385 to $46,153. Companies will actually have until December 31st to restore their FTEs, which are their full-time equivalents. There are going to be additional safe harbors for the FTE calculation. Companies are going to be allowed to defer employer payroll taxes in addition to their PPP loan, which is new. The loan duration for these PPP loans has been extended from 2 years to 5 years. And then there's also some additional questions that the new act brings about that we're going to cover today. The most material change they made was extending that 8-week covered period to a 24-week covered period, which is going to give companies more time to spend the PPP loan money on those qualified expenses. Now, the problem companies were running into is, the calculation for the loan was done on 10 weeks of payroll, but you only had 8 weeks of expenses to work with. So for companies that didn't have a lot of those other qualified expenses that were large enough over and above their payroll, they didn't have enough expenses to really spend the whole PPP loan. Now, this new act did not change the qualified expenses that are allowed for forgiveness. It's still the payroll expenses, employee health insurance, employer retirement contributions or retirement plans, mortgage interest, rent payments, utilities. Those all stayed the same. They just give you a longer time to assess those expenses. One of the other nice things about this extended 24-week covered period is it's going to make the forgiveness process a lot easier and straightforward for a lot of companies. Because again, if your loan was based on 10 weeks of payroll, but you have 24 weeks of payroll to work with, a lot of companies aren't even going to have to worry about those non-payroll other qualified costs like rent and whatnot, because they'll be able to satisfy that full loan amount just based on the payroll to their employees. It's also important to note that they did make this 24-week extension period optional. So if you're one of those companies that already spent all the PPP loan money within your 8-week covered period and you've had no reduction in headcount, no reduction in wages, you can actually still apply for forgiveness after your 8-week covered period is up, but it's just an optional provision to extend that. Now, if you're a company that, has spent all the money, but you've had a reduction in headcount or reduction in wages, you may still want to extend out your covered period so you have time to bring those FTEs and full-time equivalents back on payroll so your forgiveness amount is not penalized. One of the questions we're naturally getting because they've extended that covered period for 24 weeks is, are you allowed to apply for forgiveness any earlier than that? So let's say you got a $100,000 PPP loan and you've spent all the money on qualified expenses by week 15. Can you apply for forgiveness then? Or do you have to wait until the end of that 24-week covered period? We need guidance on that. We don't have a lot of guidance as the companies will or will not be able to do that, because it definitely benefits the borrower and the banks to allow people to apply early, because banks don't want to be servicing these 1% loans any longer than they have to. But also there's some complications that brings, because there are these calculations that are done that we saw in that PPP forgiveness application that came out a few weeks ago, and it's all based on those covered periods. And if you have some companies applying at week 12, week 15, week 24, those calculations could get complex. So just wait for guidance on that one. The next thing they changed is they actually increased the amount of the loan that could be used to pay non-payroll costs. So under the old PPP forgiveness rules, you had to spend at least 75% of the loan on payroll costs in order to get full forgiveness. Under this new PPP Flexibility Act, you only have to spend a minimum of 60% on payroll costs. So 40% can be spent on those other qualified non-payroll costs and the loan can still be completely forgiven. Even though they lax the amount on those total payroll costs to 60%, we have to be really careful about a potential cliff that could be in play. So the way they may be wording this is even though we're allowing you to do only 60% of payroll costs, if you don't meet those 60% and you're below, you get no forgiveness on the entire PPP loan, which is different than our interpretation of when it was 75%, that it was assumed that if clients missed that 75% marker, they couldn't get full forgiveness of the loan, but they would at least get partial forgiveness. So in this Q&A document that'll hopefully come out, they'll clarify that is it a cliff or is it not a cliff with this new 60% payroll cost threshold. Some other good news is the potential application of the max comp per employee that could now come into play. So under the old PPP provisions, it was an 8-week covered period. The max comp any one employee could have that counts towards forgiveness is the $15,385, because that's the $100,000 cap per year divided by 52 weeks and then multiply that by 8 weeks. Now, since we now have a 24-week covered period, if they follow that same math, it would now be $100,000 per year divided by 52 weeks times 24 weeks. You get to a little over $46,000 for a cap per employee, which could also help employers, but we need some additional guidance to make sure that they're going to carry that same math over to this Flexibility Act. So then the next natural question is, can I go back to the SBA and request more from the PPP loan because I have more comp per employees? The answer to that is unfortunately no. They didn't change the max amount of how these PPP loans are calculated, just really the time period, then changing the math for some of these forgiveness amounts that are coming into play. But we do know that as of today, there is still about $100 billion within the PPP loan program. So you may have some companies out there that didn't initially elect to take these PPP loans, even though they qualified, because they either had no employees to bring back, weren't sure if they were going to have any payroll costs. But now that they have this extended 24 weeks to work with and there's still money in the program, they may then choose to go back and get one of these PPP loans. They also extended essentially the amount of time you have to bring back employees so the headcount reduction doesn't hurt you for purposes of the forgiveness amount. So before, under the old rules, you had to have that headcount back in place by the end of your 8-week period, or if you brought them back by June 30th. Well, since they extended that covered period by 24 weeks, that gives you now more time to bring people back, increase wages back to their normal amount before you hit the end of your covered period. But that June 30th kind of safe harbor date now just got bumped to December 31st, 2020. So as long as you can bring back your employees before the end of the year, those headcount reductions may not hurt you. They also broadened the safe harbor options for these FTE calculations. So the way it works, similar to the past, is if you had a reduction in headcount, they said, okay, as long as you meet this other safe harbor criteria, we won't reduce your forgiveness amount. Well, what they did is they enhanced those safe harbors. So under the new PPP Flexibility Act, they are now offering that if there was an inability to rehire individuals who are employees of the eligible recipient on February 15th, or if there was an inability to hire similarly qualified employees for unfilled positions on or before December 31st, 2020, or if there was an inability to return to the same level of business activity as such business was operating at before February 15th due to the compliance requirements established or guidance issued by the Department of Health, the Director of Center for Disease Control or Occupational Safety, that during the period March 2020 and ending on December 2020. Basically saying if you were impacted in a way or there were compliance requirements that said you could not return to full capacity because of those requirements, they may not dock you headcount wise when it comes to the forgiveness calculations. So a good example of this is actually a restaurant. So if I own a restaurant and for the remainder of 2020, the Department of Health says I can only have 50% of the capacity, like I obviously can't reach my 100% headcount because I'm limited by those requirements. They don't want to dock people on the forgiveness side because those requirements are in place. So shifting gears a little bit, a piece of the CARES Act that was put into place towards the beginning of the year they gave employers the option to defer the employer piece of the FICA tax until 2021 and 2022. So the employer pays 6.2% of those Social Security taxes. Essentially said you don't have to pay that for the rest of 2020. You can pay 50% of that money in 2021 and 50% in 2022. So it was kind of like an interest-free loan that the employer was making to themselves. Now, the one big change that happened with this Flexibility Act is under the old rules, employers could do this up until the point that they had their loan forgiven by the SBA, because as soon as you have a loan forgiven, that disqualifies you from being able to defer those employer pieces of the payroll taxes. But under this new provision, the Flexibility Act, it's going to allow companies to both receive forgiveness and continue to defer the employer piece of those payroll taxes until 2021, 2022 if they elect to do so. One of the other things they changed was the actual duration of the loan. So when this first came out, it was a 2-year loan at 1%. And even though most people were gonna have it forgiven, if you had any balances left over, or some companies are using it as a loan, it's that 2-year period. Now, within this Flexibility Act, they did change that to now a 5-year amortization. And this will help some companies because essentially if it was only a 2-year loan and you had like a $200,000 PPP loan, that could be a pretty sizable payment when it actually comes due to start making payments on these, where extending it out 5 years might make it more feasible for companies. But the one thing that's not clear is it seems like they're offering this for any new loans that are created after this Flexibility Act was in place, but we're not sure if it automatically applies to loans that were in place prior to this Flexibility Act being passed, or if this is something that will have to, that's an option, but it has to be negotiated with your bank. And if it has to be negotiated with your bank, that could be tough because we know these banks do not want to be servicing these loans for 5 years at 1%. They want to have these loans forgiven so they can get reimbursed by the SBA and then make loans at much higher interest rates. So the other issue that kind of came to the surface with some of these changes was when you first got your PPP loan, you had 6 months before you had to start making payments on that loan, which was okay because you had an 8-week covered period and that left you plenty of time for the forgiveness application. But now with that 24-week covered period, which is essentially 6 months, that brings you right to the end of your payment deferment. So essentially, like the question came up, the forgiveness process takes time. It might take 30, 60 days for it to go through. Does the borrower have to start making payments while that's going on? Well, they kind of fixed that and basically said, payments do not have to start being made on these PPP loans until the lender receives their forgiveness amount from the SBA. But I would expect some guidance saying there's got to be some time frame that at the end of the covered period that there's a grace period before the borrower either has to apply for forgiveness or start making payment. One of the other questions this brings up is from a tax standpoint. If we're talking about a covered period ending in 24 weeks, which essentially puts a lot of companies October, November, and then they start the forgiveness application. The forgiveness application, we don't know how long it's going to take. It could take 60 days. So that means I end in November. I might not know about my forgiveness until 2021. And the problem with that is, as of right now, any of these expenses you're paying with your PPP loan, if it's forgiven, you can't deduct those expenses, but they're happening in 2020. Forgiveness is not happening until 2021. So at some point, they're going to have to address that issue to figure out how it's going to work out tax-wise. Now, I would generally expect at some point during this guidance process that they may completely revamp that SBA PPP forgiveness application that we got a few weeks ago because they got to change cover periods. But more so, it seems like they should be able to simplify it, because if we've got a lot of companies that are going to be able to satisfy their PPP loan amount just on payroll, as opposed to going through this slew of listing out, employee health insurance and employee retirement. If they can say, listen, I spent the full amount of the PPP loan on employee salaries, I didn't reduce headcount, I didn't reduce wages in accordance with those covered periods, like that should be check the box, the loan's completely forgiven and we can move on, versus making every employer go through that 11-page forgiveness application that we received the first go around. We are hoping that sometime in the near future a Q&A document does come up to clarify some of these still gray areas that exist and some of the new gray areas that have been created. When they do, please subscribe because we'll create some more videos to provide clarification on those issues. Thank you very much.